I read an article recently that said your portfolio allocation at the beginning of your retirement should be moderate, 60% stocks, 35% bonds, and 5% cash. Then I read another article that said it should be conservative, 20% stocks, 50% bonds, and 30% cash. Then I kept looking and I found so many different recommendations, it was mind-blowing. One-size-fits-all retirement asset allocation is obviously not a thing. I'm going to share my personal portfolio allocation. If you're seeing me for the first time, I just retired in June 2024 with a little under $500,000. I use the bucket strategy. If I show all of my accounts in buckets, it looks like this. This was my balance at the end of September. Since I have so many different accounts, I decided to take the time to calculate exactly how much of my portfolio was in stocks, bonds, and cash. I'll share that in just a little bit. I know you should shift toward more conservative investments when you retire. That makes sense to me. But you need this money to last for decades, so you can't completely abandon risk and potential growth. Achieving the right balance isn't easy, so how do you figure it out? I think you need a mix of investments that you believe will give you the rate of return you want with the amount of risk you're willing to take. This is asset allocation. A balanced portfolio has stocks, bonds, and cash. People have different risk tolerances, and as you approach retirement, your risk tolerance changes. You may need to focus a little less on growth and a little more on preserving your nest egg. But we also don't want to get swallowed up by inflation. Why is this so hard? Here's 3 different portfolios ranging in risk from aggressive to moderate to conservative. The aggressive portfolio is designed for a retirement that's expected to last more than 25 years. These are also people with a high capacity for risk. I'm personally very risk averse. The aggressive portfolio has 8% cash, 32% bonds, and 60% stocks. And remember, this is for someone who's retired. It would be a lot more aggressive when you're younger. The moderate portfolio is designed for a retirement that's expected to last between 15 and 25 years. This is for people with a moderate capacity for risk. This portfolio has 10% cash, 40% bonds, and 50% stocks. The conservative portfolio is designed for a retirement that's expected to last less than 20 years. This is for people with a low capacity for risk. This portfolio has 40% cash, 48% bonds, and 12% stocks. So I guess that would be for someone in their late 70s maybe? So here's my problem. Since I'm 58, my retirement will probably last more than 25 years, which would suggest the aggressive portfolio. But my personal risk tolerance is low. It's such a personal thing. I can't sleep at night if I'm worried about my money. So let's look at how my personal portfolio is balanced. For cash, I have $43,070 in my high-yield savings account and I-bonds in bucket number 1. That works out to be about 9% of my portfolio. 9% seems reasonable to me. Stocks and bonds are a little bit more complicated because each account I have has different allocations. First, I'll talk about my IRA CDs. These are not stocks, bonds, or cash. They are 100% FDIC insured and have no risk. But I can't tap into them until I'm 59 and a half. They're also pre-tax and an IRA. Because they have no risk, I'm going to lump them in with the bonds. They seem closer to bonds to me than stocks or cash. So my 401A has $104,224 in it. Its allocation is 50% stocks and 44% bonds right now. That comes out to $58,365 in stocks and $45,858 in bonds. I realize that it doesn't work exactly like this, but this was just an easy way for me to calculate it. My 403B has $72,936 in it right now. Its allocation is 52% stocks and 48% bonds. That comes out to $37,927 in stocks and $35,009 in bonds. And this is using my janky calculation method, so bear with me. My 457 deferred compensation plan has $22,496 in it right now. Its allocation is 55% stocks and 45% bonds right now. That comes out to $12,376 in stocks and $10,123 in bonds. My IRA has $74,507 in it. Its allocation is 45% stocks and 55% bonds right now. It really shouldn't be in bucket number 3. I need to redo my buckets also. But that comes out to $33,228 in stocks and $41,279 in bonds. My mutual funds brokerage account has $12,737. Its allocation is 83% stocks and 17% bonds. That comes out to $10,572 in stocks and $2,165 in bonds. My Roth account has $27,929 in it. It is 100% stocks. Like I said, I know it doesn't work exactly like this, but this was just an easy way for me to calculate it. I am not a financial advisor or an expert by any means. So when I add all the stock amounts together, it equals $180,394. This works out to be about 36% of my total portfolio. When I add all the bond amounts together, including the IRA CDs, which are not really bonds, it ends up being $271,578. This works out to be about 55% of my portfolio. So right now, my portfolio looks like 36% stocks, 55% bonds, and 9% cash. I was honestly surprised at those numbers. I thought I was more aggressive than that. I need to rebalance to something a little more aggressive. Even though the moderate portfolio is designed for a retirement between 15 and 25 years, and my retirement could last longer than 30 years, I'm more comfortable with this allocation. It's that 10% cash, 40% bonds, and 50% stocks. Once the election is over and things hopefully stabilize, I'll rebalance. I've mentioned before that I was going to roll my 401A and my 403B into IRAs. Then in February, my IRA CDs will mature and I'll need to decide where to put that money. I may put some of it back into IRA CDs depending on the rates at that time. But some of it I probably will put in another IRA. I'd like to get closer to that 10% cash, 40% bonds, and 50% stocks allocation. Obviously, I'll make my own decisions, but I'd really love to hear your thoughts. There are some really smart, competent people who watch and comment on my YouTube videos. I'm not looking for anything crazy or trendy. I'm not really interested in gold or crypto or anything like that. There's nothing wrong with those, they're just not for me. I'm more of a vanilla investor. But what suggestions do you have? What am I overlooking? What percentage would you suggest for cash, bonds, and stocks? Keep in mind how risk-averse I am. I'm really looking forward to reading your ideas. If you're new to my channel, hi, I'm Julie and this channel's Happy on Monday. Thanks for joining me. If you found this helpful, please like. And if you're interested in retiring early, consider subscribing. I'm going to leave you with a quote. Failure is nothing more than a chance to revise your strategy. Hope to see you again soon.